Hi there, it's time to look at Bitcoin through the Wyckoff lens again. Time flies really. If you're new to my sessions, here are the three key items that I'll cover during the session. So let's start off with the weekly chart of Bitcoin. Let me adjust the camera slightly. Okay, so I've made a couple of changes, so hopefully it will help you understand the Wyckoff method better, as well as the numbers and the stages are made larger. So if you're watching on a smaller screen, it will be clearer to you. So if people like it, I'll populate to other altcoins as well. And for Bitcoin, in previous sessions, we already talked about that it's going to come down to challenge the 91K and may go even further, all the way to 74,000. That was the sign of weakness level back in April. So it's only about half a year ago. Okay, at that point in time, all the news about ETFs, institutional buy-in, interest rates going to come down near the year end, all those are well known already. At that point in time. So if you're still hearing these sort of supporting arguments, it doesn't really tell why that drop was right over there. You can say it's because of tariffs and all that. Yeah, those are the news or narratives back then. Agree. Likewise for this time, this can be attributed to tariff as well. So whatever news that's been sold to the public, that's what it is. And now for Wyckoff itself, we've talked about there's still a chance for this, to come up to challenge the 91K. So what happened was last week, the test came down to 81K. It's an intermediate level that's extended from the sign of weakness initial support, okay, not the lowest point of the sign of weakness. And it's also where the climb to the buying climax happened. There was an exchange over here, the open close. Okay, there are multiple reference points to form this intermediate support, but it's not a very strong one. At least by referencing just the sign of weakness, that particular 6 weeks, it did went a little bit lower. So here, that's why I'm saying there's still quite high a chance for it to come down to test the 74K level. And that's also this white line, that's a dual support right now. That's the ceiling of the long-term playground zone. So if you're new to my session, the long-term playground zone tracks a particular crypto asset since the very beginning when they first climbed. So for Bitcoin, it was from 2017, okay? So it's getting very close to 10 years, really. So here, when the price comes down or like bounce up to this point, it's basically people trying to catch the falling knife and thinking it may go back to 104 again. But I mentioned before, look at all these white candles and their respective volume compared to that during the buying climax period where the max FOMO happened. Okay, so those volumes were way higher than the time the second up to the all-time high happened. So the candlesticks were long, but the volume wasn't. Okay, compared to this period, that's a clear difference, and that's a weakening momentum that I also explained by just looking at how the price actions tested the ceiling of this green uptrend that started back in October 2023. All right, it was over 2 years ago that this uptrend started. Look at here. First time, April 2024 or March 2024, it tested the ceiling or formed the ceiling. The second time during the buying climax, November last year, it also tested or challenged the ceiling and then come back down. This time, the all-time high at around 120K, it did not challenge the ceiling. So it's a weakening momentum. I explained, like, if you draw a line, it was initially a straight line climbing along the channel. And then eventually when we get into this year, it flattens out. So if you have looked at a lot of charts, I'm not talking about stock charts or these kind of trading charts, that kind of growth plateauing, it's similar, okay? So here, the big picture is still we are at a post-upthrust period, which is expected that it's coming to test the original range set by the buying climax as well as the automatic reaction. So that was between 91 and 104K. And now that it's below 91K, so let's see for how long it can stand above this yellow dashed line, and then eventually come down to challenge the 74K. If people continue to panic and panic sell, much like what happened here in 2022, mid-2022, that's the panic sell period. Not PS means panic sell, it's just coincidence, okay? I did not intend to line up the two like that. PS in Wyckoff is preliminary support, but that's exactly the panic sell period, okay? And then when selling climax appears, it's basically the panic is more or less over. Not saying that it's the lowest point of the accumulation, because there can be subsequent tests or subsequent bad news that push prices even further down and shake out more people. So that's the big picture. Now let's get to the daily. For daily, I haven't adjusted the tax because Wyckoff isn't designed for this. It's just for our pure entertainment purpose. All right. We said we probably have gone through the preliminary support period over the past week or a week and a half, and the selling climax in the daily time frame may have appeared. All right, let's assume it has. We have gone through those two stages. Okay, you already probably realize these aren't in sync or exactly the same as what's happening in the weekly, because that's the normal way to assess this if I am really going to plug in Wyckoff into the daily chart, because this is the way that's supposed to be used. But within these bigger waves, there are smaller waves. So these guys. So that's why we have to do it in a micro manner. All right. So we already talked about we're expecting, if that's a selling climax, we're expecting an automatic rally. So what I mentioned was the automatic rally may go back to the 91K level. As of this moment, it's still not there yet. However, if you look at yesterday candlesticks and today's, somewhere around 88K. Yesterday it got pushed back to 88K when it reached over 98K. Okay, today people try to push it down to 86, but now that people were buying in and pushing the price back to 87.5. So there can be a bit of struggle along here. And within this downward channel box or the air hockey table, the light blue box, if you're new to this method, it's basically, imagine you're playing air hockey and the price actions are like the puck traveling along this table, bouncing off between the two edges as well as this dotted center line. So sometimes it will bounce off from here. Alright, you see this happening all the time. So now it's a test when it gets to the center line, so it's kind of doing its bounce now, much like what happened last week. Okay, if there's sufficient people buying in, the volume is key. Yesterday, the day before, these bars look higher than the previous bars back in late October, early November, but then be careful because this bar is not completely solid. So the day before there was actually quite a bit of selling that almost get the price back to half the length of the candle, and yesterday was basically the bulls and bears squeezing the price to the middle. So we've got two wicks, one at the top and one at the bottom. So the high volume isn't one-sided, so it's not all pushing the price up. Okay, so let's see whether the next few days is going to, trade towards the 91K key level, the blue key level, and then eventually, maybe trade sideways for a couple of days. That can last very long if there's no more panic selling or no bad news suddenly coming out. It can last all the way till almost mid-December. All right. However, if very good news come out, suddenly somebody is selling some sort of good news, then it may pop higher than 91K, depending on whether it's going to challenge the purple dash line or the red dash line. These dash lines are intermediate levels by referencing the daily stages. The key are not those lines. The key is this triangle. Okay, that points to near mid-December or the first 10 days of December. If it is really, really doing well, then there's a chance for it to break outside of this downward channel. But in the current sentiment or situation, this is not something easy or of high chance. So more likely it may get rejected from the ceiling of the channel or the edge of the air hockey table and come back down again. Assuming that's, it's the more neutral or neutral slightly positive scenario. The pessimistic scenario is obvious, that it bounces off from this center line and then come back down to trade towards the lower edge of the box. So here, it coincidentally hits the dual support that I mentioned in the beginning. All right, that's somewhere around 75, 76K, all the way to 74K. Yeah, so that's pointing to somewhere near the end of the month, unless people get some reason to panic and the next day it already tried to go to that level. All right, so this, I would say, coming up for a second test, maybe even lower now. More is along this range, there are more tests. You can call them second tests or just tests. I'd say that's going to be 80% of it. So big picture, still around this area. This, depending on the remaining 5 days and 6 hours, it may or may not appear because it can turn red by the end of the week. All right. Just one more comparison if you want to see more. Here, during March this year, after that crazy drop, there was a little bit of this small white candle bars. We are somewhat similar to that moment. Okay, then subsequently that dip came. Even this white candle, it was actually the day that tested or showed the low point of sign of weakness that challenged this dual support, the light blue as well as the white solid lines. All right, that's why the current situation may just be the beginning of a 4 to 6 weeks or sideways or horizontal trading. Okay, so just to supplement the very last thing I forgot to cover in the beginning. Thanks for joining me. Good luck and